Hello, my name is Tejan Ratnayaka, and today with this presentation I will talk about the financial position of the Woolworths Limited by analyzing their financial statement. Woolworths known as one of the well-established group of companies in Australia. At the first in this presentation, I am going to talk about the basic information like company history, company operations, company operating locations, products, brand, and company size. Secondly, the financial position of the Woolworths, and in this section of the presentation, I am going to discuss about the balance sheet, income statement, and the cash flow, and how it is affect on the stakeholders' decision. Identifying Woolworths' key assets, liabilities, equity classes, and what is the most impacting factor in their financial performance also discussed in the presentation. Then I will do in-depth analysis of relevant ratios which help to understand the firm's profitability, liquidity, solvency, and efficiency. And after that, I will conduct a horizontal analysis with Wesfarmers, which is one of the Woolworths' main competitors. By using chart, I conclude my findings based on the data which are accessed from OneSource database. Let's move to the next slide. Woolworths Group is Australia's one of the largest group of company with 3,000 retail stores operating all over Australia, approximately 205,000 staff working for the Woolworths Group. That includes the employees who are working in the retail stores, distribution, and the management. With that large number of employees, Woolworths' main expectation is to provide the best service of their consumers. Woolworths serve 29 million customers every week with their brands. Woolworths' products are mainly based on Australian manufacturers and farmers. Woolworths first opened their business on December 1924. It was located in Sydney Imperial Arcade. Mr. Percy Christmas was the founding CEO of the Woolworths. After 3 years later, Woolworths became a chain by operating their second store at Queen Street in Brisbane, August 1927. After 2 years later, Woolworths introduced their business to New Zealand by opening a store in New Zealand in the year 1929. By 1930, Woolworths had total 19 stores across Queensland, New Zealand, Western Australia, and New South Wales. In 1955, Woolworths introduced their first self-service store in Beverly Hills in New South Wales. After 20 years later, since the establishment, Woolworths opened their 300th store in Wentworthville, New South Wales. Okay, let's move to the next slide. At the moment, Woolworths Group owns Australia's most trusted and recognized brand. In this slide, there are some brands which are owned by Woolworths Group. Woolworths Supermarket, Thomas Ducks, Woolworths Petrol, Dan Murphy's, BWS, and Big W are some of the famous brands which are owned by Woolworths Group. Okay, in this slide I will talk about the basic financial data which are drawn from the annual report 2016. By the financial year ending 2016, the food and petrol total revenue is Australian dollar 39,410 million, and that is 2.7% decrement from year 2015. Drinks Group had Australian dollar 7,589 million total revenue, and that is 4.7% increment compared to the year 2015. Big W had Australian dollar 3,820 million worth of total revenue for the year 2015, and that is 2.8% decrement when it compares with the value of year 2015. By the financial year ending June 2016, Woolworths Group had Australian dollar 1,605 million worth of net profits. Looking at this graph, we can get basic idea of the share prices of Woolworths for the last 5 years. Talking about last 5 years financial position of Woolworths based on the ASX data, they opened the share price 25.71 and they recorded the highest as 25.85 and the lowest as 25.57 Australian dollars. Okay, let's move to the next slide. In this slide, I am going to talk about the balance sheet, income statement and cash flow. According to current ratio of 2016 and 2050, it seems there is 0.01 decrement in the year 2016 when it is compared with the year 2015. And comparing quick ratio with the year 2015, there is 0.07 decrement in the year 2016. But the company was able to maintain the current ratio more towards 1. That means because of that reference, the suppliers of the Woolworths can keep supplies to the company. Considering the gross profit margin, 2016 had 0.4% decrement in the year 2015. So according to that, it can say company maintained the products and services similar to the last year. Operating profit margin has 2.73 difference compared with the last financial year. It is a high decrement when comparing to the last 2 financial years. So it will give a negative impact for both internal and external stakeholders' decision. Woolworths has minus 2.1% of net profit margin for the year 2016. This will be a major disadvantage for the company's long-term business objectives. Because of that, stakeholders will think that the company had a loss in year 2016. Cash flow of the Woolworths at the year 2016 had high positive increment than the last 2 years. That will give you a positive impression for their both internal and external stakeholders, because with the high cash flow, internal stakeholders can think that the company will get their salaries, pay their salaries on time. Based on this high cash flow, company can request more credit values from their suppliers. In here, there are some key assets, liabilities, equity classes, income and expenses have identified according to the data drawn in the OneSource database. As key assets, Woolworths Group have total inventory worth of Australian dollar 3,384 million, cash and cash equivalent worth of Australian dollar 704 million, and as key current liabilities payable worth of Australian dollar 4,652 million, current debt Australian dollar 364 million, and as current liabilities long-term debt worth of Australian dollar 2,871 million. Having a current liabilities, the organization able to go for high liquidity ratio. As a key equity classes, it can get capital stock worth of Australian dollar 3,899 million, retained earnings Australian dollar 2,319 million. Considering the net income of the Woolworths, it can see that the income got decreased compared to the last couple of years, which is give a bad indication for the company's both external and internal stakeholders. But Woolworths has total expenses worth of Australian dollar 10,395 million, which is lower value compared to the last couple of financial years. This is a positive fact when in the organization perspective. In this slide, I will talk about how the key assets affect in the managerial judgment. Maintaining high assets than the liabilities help the organization to keep high liquidity ratio. That means the organization has the ability to pay their current liabilities on time. By analyzing Woolworth's past years' asset and liabilities, it can say that the company been maintaining high asset value in the past couple of years. This will lead their management to operate low depreciation value. Last financial year, Woolworths Limited had accumulated depreciation worth of Australian dollar 7,971 million, which is little bit higher than the depreciation value of the year 2015. The gap is Australian dollar 94 million because the fair value convention. In the fair value convention, the depreciation done by referencing to the current value of the assets, and this will give high depreciation percentage than the year 2015. For the year 2016, Woolworths had short-term investment worth of Australian dollar 41.6 million, which is Australian dollar 103 million decrement compared to the financial year 2015. With the high liquidity ratio and high asset value, Woolworths management can invest in more short-term investment in order to get money in short time period. Also, Woolworths had current debt worth of Australian dollar 364 million, which is pretty lower than the year ending June 2015. So the management can request more credit from their suppliers. This will also guide the management to increase their assets of the company. In the last session of the presentation, I have conducted an analysis of the financial performance and position of Woolworths, and this analysis supported by an in-depth analysis of relevant ratios which help to understand the firm's profitability, liquidity, solvency and efficiency. And horizontal analysis is conducted between Woolworths and Wesfarmers in order to get a better understanding about the financial performance of Woolworths. We can start it from analyzing the profitability. I have used two ratios which are gross margin and net profit margin. When considering the gross margin, Wesfarmers have maintained high value than Woolworth in past 3 years. Also, both organizations able to maintain the gross margin stable in last 3 years. By studying this, it can say Wesfarmers had higher opportunities to grow their business compared to Woolworths Limited. Considering the net profit margin in 2016, Woolworths had negative record, which is minus 2.12%. That means Woolworths didn't make any profit in 2016, and the sales they did not enough to cover the cost of the business operations. So in order to overcome this matter, Woolworths may change their financial structure. Wesfarmers' net profit margin is 30.51% in 2016, which means Wesfarmers generating 30.51 operating profit for every dollar sale, and Wesfarmers maintain the value over 30% in last couple of years, which is pretty good status when it compares with the Woolworths Limited. In order to explain the efficiency, I have take asset turnover and inventory turnover ratios. Considering Woolworths asset turnover in year 2016, which is 2.39, that is higher than the Wesfarmers asset turnover ratio, which is 1.61. Also considering Woolworths and Wesfarmers past 3 years asset ratio, Woolworths able to maintain a higher ratio than the Wesfarmers. With that information, it can say that the Woolworths deploy their assets by creating revenue than Wesfarmers. That means Woolworths performing better than Wesfarmers. Also, it can say Woolworths generating more revenue per dollar than Wesfarmers. Considering the inventory turnover ratio, Woolworths able to maintain high value than Wesfarmers. This means Woolworths managing their inventories better than the Wesfarmers, and Woolworths instruct their sales and purchasing department well. To explain liquidity, I have take current ratio and quick ratio as the two ratios. Considering the current ratio of the both retailers, which lower than the one in last 2 financial years, which means that the both retailers are not running their business efficiently. Also this will give negative impact for their stakeholders when they making the future business decisions. Also, because of this low current ratio, the management will face difficulties when they applying credit terms for their suppliers. When considering the quick ratio of the both firms, that is also less than 1, with that it can define that the both companies don't have enough liquidity to pay their day-to-day obligations. So it may increase the people turnover rate from the both companies. Solvency can be explained using total debt, equity and interest coverage ratio. Woolworths has debt to equity ratio 0.51 and Wesfarmers has 0.64 in year 2016. In order to become good, this ratio should be equal to 1 or higher than the 1. But both companies unable to maintain their value over 1 in last year. If the company unable to balance the ratio, which means equal to 1, that will affect both externally and internally when the organization going to be liquidated. Also, this low rate means the company doesn't have large debt and they can request more credits and the lenders can trust their repayments. In year 2016, Woolworths interest coverage rate is 6.54 and Wesfarmers had 4.37. Both represent good value because high interest coverage ratio represent organization doesn't have any problems when it comes to pay their interest and interest expenses. If the organization maintain this 3 or better, it can be considered as favorable situation. In this slide, I have mentioned the summarize for what I have talked in the last slide. Basically, these are the key findings and facts. And moving to next slide, these are the references that I have used to make this presentation. That's all. Thank you.